For instance, consider Nvidia. A month ago, it was trading at $134 per share. Now, it's down about 25% to about $100 per share. However, in terms of attitude, I believe that Nvidia's upcoming report in around 3 weeks will be quite beneficial because, by all accounts, demand is still higher than supply. Yes, I am aware that's the other crucial question, John. Though attitude has obviously altered, the fundamentals haven't changed all that much. Someone has been frightened. The Fed has enough of ammunition to spare us from a terrible recession, as it is currently anticipated that it will begin to reduce in a month, and I believe 2 more after that. It was more than $3 trillion, but it might eventually fall below $2 trillion. Yes, well, and keep in mind that Nvidia's growth matched the increase in profits. They generate revenue. So when it's down, what is it doing? After talking to investors over the past week, I would assume that some of the 32% decline was due to the market's probable movement. This retreat is being sniffed out. The stock they made the most money on was Nvidia. Profits are found there. They had a great year. Let's remove some money from the table so we don't ruin it now. You could actually divide the cloud into 3 categories. For Nvidia, AI is the first order of business and is fueling the models. It isn't going away. The second section then discusses smartphones, followed by PCs. Regarding AI on cell phones, we're far more optimistic. The stock price of Nvidia, the computer giant leading the way in artificial intelligence, has skyrocketed in recent years. Economic indicators are vital in determining investor sentiment and stock price fluctuations, even though the company's technological innovations are a significant component in its valuation. Nvidia and the economy at large have a complex relationship, with a number of important economic issues having a big influence on the company's performance, and in turn, its market value. Let's start by talking about global economic growth. Generally speaking, a strong global economy raises demand for semiconductors, such as Nvidia's GPUs. Data centers, game consoles, and increasingly AI applications depend on these chips for power. The demand for the technology that Nvidia offers rises in tandem with the expansion of economies and sectors. The company's revenue growth and stock performance are directly impacted by this demand, which is fueled by economic success. Another important component of Nvidia's economic equation is consumer spending. The demand for gaming GPUs, a major source of income for the corporation, is directly influenced by consumer confidence and levels of discretionary cash. The demand for Nvidia's state-of-the-art GPUs is fueled by consumers' propensity to purchase expensive gaming systems and other tech-driven goods when they have more money to spend. This correlation between Nvidia's financial performance and customer behavior highlights the company's strong ties to the larger economy. Another important factor in Nvidia's development is corporate investment. Plans for business capital expenditures, especially in data centers and technology, fuel demand for Nvidia's high-performance computing products. Nvidia stands to gain from this increase in corporate spending as businesses spend more and more to upgrade their technology infrastructure in order to remain competitive. This business dependence on cutting-edge technology strengthens Nvidia's standing as a vital participant in the world economy. Heavy volume declines and gaps, which indicate that the market has been sluggish for 2, 3, or 4 weeks, are the conditions that most of them share. Then there are news stories about earnings gaps and declines at companies like Amazon and Microsoft. We'll see what happens with Nvidia. But at this point, you don't recover that quickly due to the tough selling and aggressive distribution. That's what happens when you see a decline and gap in volumes 4 or 5-fold. Therefore, interest rates are another important element that affects the price of Nvidia's stock if those equities do perform lower and the small caps have given back all of their gains. The mood of the market as a whole and investor interest in growth stocks like Nvidia may be impacted by rising interest rates. Increased borrowing costs due to higher interest rates have the potential to slow down economic growth and lower demand for Nvidia's products. When interest rates rise, investors typically become more cautious, which causes Nvidia's stock price to fluctuate more as the market reevaluates the company's growth potential. For Nvidia, the current state of the economy has brought both opportunities and challenges. Although the world economy has shown resilient in the face of numerous challenges, concerns have been brought about by elements like inflation, supply chain interruptions, and geopolitical conflicts. The semiconductor industry as a whole has been affected by high rates of inflation and continuous supply chain difficulties. But these difficulties have been somewhat lessened by Nvidia's dominant market position and pricing strength, which has helped the business get through these difficult times more skillfully. From an opportunity perspective, Nvidia has benefited greatly from the AI explosion. The demand for Nvidia's GPUs has remained strong as businesses from a variety of industries make significant investments in AI technologies. Since Nvidia's technology is crucial for training big language models and enabling a variety of AI applications, the industry's rapid growth continues to offer prospects for the company. Despite more general economic difficulties, Nvidia's growth pace has been maintained in large part by this AI-driven demand. Nvidia's stock price and economic indicators have a complicated and nuanced relationship. According to historical data, Nvidia's stock has frequently outperformed the overall market during times of economic boom, indicating the high demand for its products in a developing economy. Yes, I would say that Nvidia's stock has underperformed the majority of other semiconductor firms exposed to data center AI, having declined by around 30% since its June peak. We still anticipate Nvidia to lead the data center XPU market, even in light of recent worries about macroeconomics and the Blackwell delay. In-house XPUs are also performing well. Organizations such as Google and Amazon are creating their own in-house XPUs, and AMD GPUs are becoming more popular as alternatives to Nvidia GPUs. However, we anticipate that Nvidia will continue to dominate a rapidly expanding market. Therefore, we don't see many negative aspects of Nvidia's data center revenues and valuation projections. I believe that's the proper way to look at it because the stock is currently selling below the trough multiple of the 2018 to 2019 down cycle. You did specify 40% of overall revenues. Additionally, Nvidia reveals that almost half of its data center sales come from big cloud service providers. It's true that we still need to see some additional revisions to consensus expectations for CapEx growth next year in order to meet Nvidia's expectations, but not by much, maybe 10 to 15%. If you look at how much capital expenditures for the top 4 hyperscalers are expected to grow this year and next year, and break that down between investments in AI and traditional infrastructure. On the other hand, Nvidia's stock has been more volatile during recessions as investor mood is affected by market concerns. However, company-specific elements like new product releases, advancements in technology, and changes in investor mood also have an impact on Nvidia's stock price. In summary, there is a complex and convoluted interaction between Nvidia and the economy. Nvidia's success has been largely fueled by its ability to innovate and take advantage of new trends. Even while economic indices clearly have an impact on the company's performance and stock price, in order to evaluate Nvidia's valuation and investment potential, investors will need to keep a careful eye on both macroeconomic variables and company-specific changes as the global economy continues to change. Gaining an understanding of this intricate link can help one better understand the forces influencing Nvidia's future in the quickly evolving tech sector. Get your Nvidia keychain quickly for less than $10. Only the first 100 orders will qualify for our huge discount. Currently, Alphabet, Meta, and Microsoft are all relatively inexpensive, but their valuations will increase. Therefore, I haven't done anything in the past several days. As I indicated on the air, I did purchase a small amount of Facebook, or Meta, during the major collapse.